This will be our 9th session, which will be recorded and placed in the Precision Traders Resources PDF document later tonight or early tomorrow morning, my time, Pacific. Depends on how long it takes to convert from GoToWebinar. Yeah, tab 28. That's the one you guys skipped. You went right to tab 29. The graphics programs don't catch stuff like that. They only catch typos, misspellings. All right, so this session is titled Tab 29 in Use and Question and Answer. So, I think what I'm going to do is jump to my last slide first as some general comments. And the first thing I want to say, and this is true since, just as I was going on my break, we had just went from multi-wave and a couple of sessions on tab 29, and then I did give you your indicators over the holidays, which means we've not had any training since you've been given the indicators. We've not talked about them in use. And I'll just say, as a general observation, you need to slow down. When you first started with me at IML and we started pitchforks, we went about 3 weeks, 4 weeks of just throwing them on the charts. Pitchforks were pointing in the wrong directions. They were on the wrong swings or less probable swings. They weren't lining up. And there were several dozens of forks, per most every person. A lot of people didn't, but most. We learn from what not to do. And a lot of you guys are jumping right in with, getting your tab 29 indicators, and all of a sudden you're confused, and all of a sudden you're struggling, and oh my, and, where's the dozens of posts before you have that kind of self-talk? You're forgetting your roots. You forget how you learn to trade. And it's okay to have questions. That's great. But some of you are making these empirical statements, like as if you've been trading it and having it now 3 months, and oh my gosh, you're just not getting anywhere. We took a 3 to 4 week break here. So you need to slow down. You need to have a little patience. You need to watch your self-talk, because your sensory information gateways are going to bring you more of what you talk about. So when you're challenged or you're struggling or it's just not working, guess what? You're programming your SIG to bring you more of the same. You're programming your SIG to shut down what you need to be saying and just giving you more of the negative that you're talking about. That's why they're so, law of attraction is so intertwined with your sensory information gateway. So let's just slow down. Let's have the right self-talk. Let's find out what isn't going to happen with tab 29 by, doing our demo trades and learning from those. And then you're going to learn about integration with your technicals and your sensory information gateways. So I'm kind of tempted to show you another slide here, but I think I'm going to wait and do what I need to do tonight first, and then we'll get to that next to last slide. Everybody on the same page now? We're good with, we're just picking up where we left off in mid-December, and some of you are acting like you should be 3 weeks ahead when you just can't be. We haven't had time together during that space. Are we good? All right. Oh, there it is. Hiding on me. All right, let's get into questions. Something I've been thinking about with pieces of 10 and exiting in scale. Is there a rule on how many pips you should be in profit before exiting on the 40% pullback? I've been playing around and experimenting with quick-fire entries using TAB29, and pretty much every trade goes at least 2 pips into profit with the momentum of the entry. Then some continue and some turn around. The ones that turn around usually go into a few pips loss before the trend bars flip to give me an exit signal. Is 2 pips profit too soon to start looking to exit in scale? If price came back 1.2 pips, you'd exit. I'm thinking that exiting at that point could be a great way of trading defensively and following the concept of making sure you end the day with your equity ball either the same or bigger. So you get out of the slow trades very early, more or less breaking even, and then you make your profit on the occasional ones, that take off with real momentum. That's exactly right. The whole concept of TAB29 is not to say, here is the perfect entry, which is what you all are looking for. It will give you that plenty of times. TAB29 is about taking trades in the area that there should be a reversal, and if you're early, not losing. This is the proverbial swing the bat, miss the ball, and it still not count as a strike. And yes, it's nice when you have a big fat pullback and price starts going the other way and you're waiting for all your bars to turn green. And if they turn fast enough, you get to exit and you're going to make those pips. But there will be times that it comes back and it hooks back on you pretty fast. And that's why we have that 40% reality. We're going to put a Fibbo on this once we start getting past 3 or 4 pips. Look, guys, you don't need to try and measure what 40% of 3 pips is. Let's just be practical. So, I have a Fibbo coming down. I keep pulling it down until I get to the depth of my pullback. And then I've got a 40% line on there. And it's simple. One of two things is going to happen on that pullback. I'm either going to get my bars to flip or I'm going to hit my 40% line. And so, we're doing a sell up here in case anybody's confused. On this pullback, or hook back as we would call it, if it's a smaller move, you're only 3 or 4 pips down in profit at the time it starts hooking back on you. There's no need to measure. You eyeball it, When this thing starts coming back, it's time to get out of there. That is not far enough to be a wave 1 in most of your 15-minute trades. So the answer to this is pretty much, if I'm only 2 pips in profit, it came back 1.2, I'm out of there. These are quick exits. And you may not get out in time. You may actually go -1. Oh, break the bank. I better quit the Forex. This thing just isn't that profitable. This is about taking a swing on a trade that the leg is big enough on the CD, if we're talking about a scan. So it's 80 pips, so my 15%, is going to give me my 10 pips. And if it starts, I'm only 2 or 3 pips in the trade, starts turning around going against me, I could kind of judge where halfway is. I'm not looking at my trading station. Once it starts getting down 7, 8, 9, 10 pips, you can put your 40% line on. This is about a quick exit. And let this thing go on up to a high and now come back down, and my bars turn red, and now I have my entry. The difference is, if you were the IML trader with just your green line entry, wherever it be, this trade would stop, this trade, if the line was closer here, this trade would stop you out. We don't have to get stopped out. And quite frankly, even if it doesn't stop you out, even if it just goes to the higher high and you stayed within your stop loss, who wants to be backed up 7, 8 pips? I'd rather exit and eat 1, even 2, and get back in and then make those pips back up that they're just, they went negative, now they're coming positive. And by the time they get back to positive, we're already +5, +7. Any questions? Ask them. Ask them. Don't sit on them. No such thing as a stupid question. Tab 29, guys, is not there's no holy grail. The holy grail that exists with Tab 29 is when you're wrong, you have a chance to get out and it not cost you. The first 10-minute wave, or in this case, 15-minute wave, I will trade as pieces of 10. The first 10-minute wave of a 30-minute convergence, I will trade as pieces of 10. No, 40% of when you entered the trade. 15% has nothing to do with it. Inside multi-wave. I've got my 10-minute convergence or 15-minute convergence. They're interchangeable depending on what time frame we're on. I have my 15-minute convergence, and it starts pulling down. And, I enter the trade. Why? Because all my bars went red. So I'm in that trade. As this is coming down in terms of price up here, I put my Fibbo from the top of the move, and I just drag it down. And I got a 40% Fibbo. So no matter where I drag this down, this is always 40%. And I just drag my Fibbo down to match wherever my low is in price. So when it starts going back, I now have a fixed 40%. I don't want to erode more than 20%. Essentially, we're saying the bars turning green is our MSL. So prices come down. Prices come down, starts hooking back on me. I get the hook back here. I'm looking for green bars to exit the trade. When they turn green, that's my MSL. Unless they haven't turned green by the time price reaches my 40%. So we have a stop loss with a secondary stop loss. My MSL is bars flipping. If they don't flip fast enough, then when I get to 40%, that's my exit. It's 40% of the move, not from where you entered, from the height of the move. %40 rules over bars. Yes, same. That's just another way of looking at it. No, you draw your Fibbo from the high point, not from where you enter the trade. Guys, this is your Elliott wave stuff. We're going to allow at least a 38.2% retracement. We're just rounding it off to 40. Richard, well, he still can't hear me. Okay. Let's move on. So the question is about the bars and the indicators, and this is just a simple function of understanding your charts. Your charts have candles and a center line where they draw the wicks. So here is your wick. Here is your wick. That's the center line of the body of your candle. The body of your candle is not associated with price or time. It is merely your chart vendor's discretion as to how wide they want to make the body. But we measure center to center. So what is interpreted here as being both, meaning two bars, is not true. It's only one bar that you're seeing from center to center, from center to center, from center to center, from center to center. This is not two bars. This is one bar. This bar is closed or drawn closed at when this candle closes. Any questions? Tis the same with your indicators. Tis the same with your haul. You need to get this down so you see it on the haul. Okay? Any questions about that? We good to go? Okay. Waves bring me a lot of confusion, as on the charts, they don't look such perfect and proportional, and waves seem mixed up with higher and lower highs, and when it's hard to establish a channel, and many times that process I can see a harmonic wave convergence but doesn't move direction. We're throwing way too many things together here, Dace. I know most of these confusions have been answered in the course, and I'm prepared to give some time for waveology. No, you're not prepared to give some time. You're prepared to do whatever it takes and to persist until you get it. Oh my gosh, we've had the indicators and absolutely no training on them, and we're already putting deadlines on what we're going to give. I'm getting grizzly. It's okay. Each bar is a different time, yes. but it's center to center. So way too much in here is a question. Okay. I'll do some interpretation best I can. If you think I've misinterpreted, help me understand Dace's question a little better. So, first of all, you're not always going to see a channel. That shows up in somebody else's question. There's not always channels to see. So what happens then? Nothing. You don't force trades. This is what I've said about trading, guys. We look for specific things. If we don't have the specific things, we move on. If I don't have great channels and I'm trying to do channel trading, time to move on to another pair. I'm not going to try and force something that isn't there. And no, you will not always see channels. Price doesn't always do what you want it to do. Confusion on the charts, they don't always look so perfect and proportional. You're right, they don't. So this was a chart, from one of you guys, Trader, posted the other day. I'm sorry, I forgot who it was. I truncated it out. But look at the 30-minute wave coming down. The 10-minute wave is cycling the 30-minute wave down. And guess what it cycles it down to? A 30-minute convergence. I mean, I don't know. That's picture perfect. This is the chart. Go look it up. I didn't edit this. There's my 1-minute wave coming into my 10-minute wave, coming into my 30-minute wave. And when the 1-minute wave clears and I got green bars, I'm in my trade. Somebody new, I kind of warned new people not to come. You were right. I'm lost. I'll go to the first sessions. See you on Monday. Yeah. So, yeah, Edmundo's post. So no, it's not always, so clean and perfect. Do we care? No, because that's what we're looking for. This is what's called discipline. This is what's called selectivity. In this particular case, the perfect convergence took place at the end of the scan. Only comment I have, Edmundo, is be sure to put your green line on here from the scan. We want to see where the scan was saying the trade was. So we don't worry about it. But, there's a lot of leeway in this. So that's perfect. What about this one over here? That, was that a convergence or not? Maybe it was. But, I didn't have any green bars in the area that it took place. Not until over here. Right there is the edge. I sharpened my pen. So it didn't happen right away. Okay. I don't know what the scale was here. I mean, pretty big as I recall. So we would have got in there. And if we see that, there wasn't a big push-up. There wasn't a big push-up. That's always an indication that there's still some downward pressure. So that's why you would exit. It's okay. I get in here and I get to exit, somewhere in here. As it starts coming back down. Got red bars. No. Up here. Wait for the bars. Are 40%, right? So guess what? I made okay pips on the entry that didn't look so perfect. Guys, 5 pips a day makes you a millionaire. Richard and I were talking yesterday. About FOMO. Got to have your head on, guys, right? This is part of your SIG growth. And, a lot of you are, like I said, we just got the indicators. I should have waited until today to give them out, I guess. As too many of you were looking at it as, back to the buy it Friday, trade it Monday concept. You've got to clear FOMO. You've got to have an understanding that you're not desperate for trades and you will wait for your selective setup. And we concluded that, there's also a secondary phrase for this is when you're desperate for a trade. It's been so long, or the past few trades haven't worked out as you think, as you are the great evaluator of trades and you think they didn't work out, rather than saying this is a learning process. You're still there trying to grade your trades. You're still going for the win, because you can't say they didn't work out unless you're trying to go for the win. Instead of saying, man, I can't wait to learn from this trade. Can't wait to see what the group says, Steve says, the admins say. But there's another component to FOMO. FOMO is taking crappy trades. FOMO is taking lottery ticket trades. Nothing else coming along. I better take this one. It's been 2 days since I've had a trade. But there's another component on this, and that is when you do take a trade that is per your criteria. Here's one I made up. Deb. How to make it be something we could keep as an acronym that's easy to remember. So FOMO is taking crap trades. There's a kind of a version of FOMO that we're going to call Deb, and this is when I get my 7 pips in a trade and I tell myself I can do even better. So I continue to trade that trade or that move. I could do even better. So we have FOMO standalone, and then once we're in a trade, we have FOMO plus Deb. So these are things you have to overcome for your sensory information gateways. So you're not doing, you're not trading with FOMO and you're not trading with Deb, with the exception of Tim Packus, whose wife's name is Debbie. Do even better. I got my 7 pips, but oh my, if I do this and do that, and and see what happens when you try and do even better, your SIG adjusts to the negative. It has a little cockiness to it, has a little arrogance to it, has a little ego to it. And it shuts down things you should see. Your adrenaline is rushing and you're getting those endorphin hits or whatever, and you feel really good about your 7 pips. Got a little swag about you. Well, your SIG is adjusting now. Go away from the charts for a little while, then come back. Let that adrenaline flush out. So we have fear of missing out. That's why we take lottery ticket trades. And then when we do get trades that work, it is a bit of FOMO, your fear of missing out on the extra pips. But the extra part is about because you believe you can do even better than you just did. So you're going for more. Yeah, and then you end up losing. All right. So don't put too much pressure on the waves. Oh, well, on that point, guys, I used Elliott Wave to talk about harmonic wave convergence, because it's the only thing that in the Forex or in trading where we're measuring waves inside waves. And there's only a comparison to talk about. It's the only kind of framework we can use in this hypothetical world. Remember, I talked about it like the God particle in subatomic physics. They can't see it, but they know it's there because they see its impact on everything else they can see. So we don't have a way of talking about harmonic wave convergence. I did say that harmonic wave convergence is not Elliott wave. Elliott wave is not harmonic wave convergence. You won't have an Elliott wave ending, whether it's an external wave or a sublevel wave. You won't have it ending without there being harmonic wave convergence, but you can't go the other way. We can't say, oh, because there's harmonic wave convergence, we got a new wave count. It's about wave strength. We measure the end of the moves on multiple time periods through a complex and sophisticated wave strength formula. That's a little bit more accurate than RSI or stochastics or some other things out there. So when we have a wave ending on the 1 minute and it syncs with the wave ending on the 5 minute and it syncs with the wave ending on the 15 minute and it syncs with the wave ending on the 30 minute, we have a 30-minute trade. It's about moving the box down. Instead of having 25 pips of slush on a 30-minute chart or 10 or 15 on a 15-minute chart, bring it all the way down to the 1-minute chart where we only have 1 or 2 pips of slush. Let all the waves meet at that point, just like they do right here. So, way too much emphasis on Elliott wave for this group. Now, there might be a few of you, I know there are some of you who have previous trading. And of course, I know my pip clubbers, many of them have been trading for 2 and 3 years and more. So they have had long-term exposure. The counts start to become more clear. I still, I told you I've been trading 14 years and I started Elliott wave, in my second year. I left it, but I came back to it eventually. I mean, I've been, and I can't do wave counts 95% of the time. And you guys are trying to figure out wave counts. We don't trade Elliott wave. We trade harmonic wave convergence. The only Elliott wave that has any significance right now of understanding is the 1-2 move. And I've given the parameters on that. That 50 to 61.8 is where 73% of the time the wave 2 turns. There's a very high probability in a very tight zone. In terms of a scan, in terms of a pitchfork who has a parallel running like that, oops, getting dry, right? Understanding that's not so much a test of the pitchfork. The pitchfork's just providing the resistance, or in this case, the floor support, to end the wave 2. That's 99% of what you need to know about Elliott wave right now. They don't always converge so pretty. In terms of multi-wave, we have our 1-minute wave, our 3-minute wave, our 5-minute wave, our 10-minute wave, and our 30-minute wave all converging to a point. That doesn't get any prettier, and that reflects in TAB29 as well. We're just not measuring as many waves. Yes. If I have, that's the whole point of harmonic wave convergence. If I have a 10-minute wave going to an extreme, when the 1-minute wave converges with it, now in multi-wave it has to be clean. The 10 has to be there first. Tab 29, it doesn't have to be so clean because we got so many different waves there. That's not just the 10-minute wave, that's power 10, and it has 12 indicators in it. The 1-minute wave can come up and meet it nicely as it did in that one there. It might come up a little earlier. It's when it leaves and we have the red bars. That is our entry. If the 30-minute wave is there, that is a 30-minute convergence. If the 4-hour wave is there, that is a 240 or 4-hour convergence. Well, I don't need to know that because I'm just trading 15-minute charts. Guys, let me ask a question. Here's your pop quiz. What is the strongest $15-minute entry? Think of your scans on your 15-minute chart. What is the strongest 15-minute entry? No. That's the right answer, but let me give you additional data. What is the strongest 15-minute entry of any scan D? All right, so y'all aren't getting this, and that's okay because you're brand new to harmonic wave convergence. This is my point. See, you don't understand it yet, and yet you're being so critical of yourself and understanding and being confused and overwhelmed and struggling and blah, 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 and you don't know it yet. So let's review real quickly, excuse me, wave structure. I have a 30-minute wave. Inside that 30-minute wave, I'm going to have a number, and I could draw it like Elliott wave, but I don't want to, I'm going to not draw it like Elliott wave for my point here. See, each one of these, now again, understand underneath, I should have drawn that in yellow, I guess. Excuse me. Now realize, in terms of multi-wave, TAB29, they flatten out the waves. So I have a harmonic wave convergence at the 30-minute level there, and I have another harmonic wave convergence for their 30-minute level there. In the meantime, I've got, multi-wave and TAB29 going to the channel and into the data feed, and they kind of find channels. And don't worry about it being perfect. And what they do is they find highs and lows for the 10-minute channel. Here was a low. I didn't draw this up all the way. Here's a low. Here's a high. Here's a bottom. Here's a top. Here's a bottom. Here's a top. Here's a bottom. What's that going to look like in multi-wave or tab 29? Boom, 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 boom. Realize, let's look at this move here. My 1-minute wave is going to have its tops and bottoms as it carries the 10-minute wave to the top. Top, bottom, etc. It's going to repeat that all along. The 10-minute wave is a sub-level wave to that 30-minute wave. It's going to cycle. It has its own convergences. That is a 10-minute convergence. That is a 10-minute convergence. That is a 10-minute convergence. So let me go back and re-ask my pop quiz question. Which of my 15-minute wave entries is the strongest? Or 10-minute. Which of my 10-minute entries? They're synonymous right now. Which of my 10-minute waves is the strongest? The one that is also a 30-minute convergence. Look at this 10-minute wave here, and look what price did after that 10-minute convergence, because it was also a 30-minute convergence. Price went all the way up there. Where did it go for any of the other 10-minute convergence? Oh, it went that far. Oh, it went that far. Because they're smaller waves. And this being a 30-minute convergence, it's going to continue the 30-minute size move. And so this guy and this guy in the opposite direction are the strongest 15-minute convergence because they share an upper level wave. This is waveology. This is why we don't want any 1-minute wave. Let's look at this last leg of the 10-minute wave. 1-minute convergence, 1-minute convergence, 1-minute convergence. In that case, what's the strongest 1-minute convergence? The one that's also a 10-minute convergence. The one that's also a 30-minute convergence. That last little bit of 2 to 3 pips of that last 1-minute wave could give us a trade that goes 100 pips. But these can't go 100 pips. Those go 7 or 8 pips or 5 or 6 pips. This is your strongest trade. Now, sometimes you have to earn it because the bigger the wave, the more they like to slide a little to catch the actual top. So that's why sometimes you'll see a 30-minute snake. Or on a 4-hour move, you'll see a 4-hour snake. So the 30-minute wave, if I'm trading 15-minute scans, and I'm looking for a 15-minute convergence at my D point, the strongest of them are going to be the one that's also a 30-minute wave. We're going to regress a little here in the next few weeks and go back and learn which pattern appears where in the chart in terms of upper level waves. Some patterns are reversal patterns and some patterns are continuation patterns. In other words, some patterns end the big move down. Some patterns, and therefore I have my D down here. Some patterns are the end of a retracement. And they're actually continuation patterns. So you have termination and reversals, and you have continuation patterns. It'll help to know that. No, you have no way of knowing how long the snake is, and that's why every time you have a convergence against the snake, it's a freebie. Take the trade, take the trade, take the trade. Because if you're thinking it's the end and it's not, it's a swing and a miss, but it's not going to count against you. You're going to leave that with positive pips. Now, I'm speaking harmonic wave convergence in general. Too many of you are already overwhelmed. Don't be overwhelmed. It's okay. You'll get there. Just understand the strongest 10-minute or the strongest 15-minute convergence is going to be the one that's also a 30-minute convergence. And it'll be super strong if it's a 15, 30, and 240. So, like I said, there was a lot in this question. Don't worry about Elliott wave. You'll get there. It's way too early. I'll show you an example of what can happen after you have some years under your belt. Don't worry about Elliott wave. Don't try and sync up Elliott wave or harmonic wave convergence. They're not related in that manner. You will see Elliott wave if you can find a pronounced count. You will find harmonic wave convergence at whatever time period your Elliott wave count is. You will have harmonic wave convergence syncing up with it, but you can't sync Elliott wave up with harmonic wave convergence. We trade patterns, guys, and we have a rule of thumb. My Pip Club traders can tell you, because we call this the Holy Grail. There is a Holy Grail to trading, and it is when you don't know what the patterns are saying, you don't trade. You wait for the times where you do know what they're saying. You can't have a top of a move without it being a convergence across lower level time periods. So the question was convergence. Is it the tops and bottoms of each move? I thought it was where two time frames converge. Yes to both. I hope that makes sense. You can't have a wave reversal at one level without the lower levels also reversing at that point. That's what defines the reversal. And that's why having multiple time frame analysis where you can see all the time periods on one indicator channel is a great tool. This isn't specific to the indicator, but would be great to hear if we were planning to use the bronze, silver trader designations this group as we continue to learn and start posting trades. No, we're not using those definitions here. That's for the PIP Club group. They've come up a different way, and you guys are skipping a lot of that. There's no designations here. You're trading tab 29 or you're not. Yep, it's okay. That's why you ask the questions. I would find it helpful to see some more examples of tab 29 in use on the charts covering different scenarios, examples with scans, forks, and fibos. So Trevor's getting into where we really need to go with tab 29. And so I will now, because the question was raised, I will go to my last slide, or next to last slide. The last slide was the Grizzly slide. So when you started with me, you started with pitchforks. Hey, pitchforks are a new paradigm way of trading because we can have very tight stop losses. We have great precision. We still have a long ways to go with pitchforks, but that's okay. So we traded pitchforks standalone. After we went pitchforks for a while, then we looked at quickfire. So, now we're looking at harmonic scans. And you learned the quickfire strategy. Basic 10 pips, 15%, haul, etc. And you traded quickfire as a standalone strategy. Then we came back to Charlie Delta. It's kind of like just circling back to pitchforks. It's just a particular kind of pitchfork. So it's based on the scan. And initially, unless we need to adjust it, it's a traditional fork. So it's very easy to do. We're just using the high percentage of the scan to draw the most viable pitchfork on the chart. Doesn't mean they always go. It's just they're going to go more than others will. And we traded Charlie Delta standalone. Now, you've been given the INS, but again, we've had no training on it. But understand, the INS is just a quick way of having best intraday support and resistance, or better said, potential support and resistance. And now you've got tab 29. And so what's happening is you're getting a little, because we've had no training, you've taken training, you've gone through the coursework, but we haven't had any practical training in the sense that we haven't watched you or watched me put it on the charts and trade with it. But nonetheless, while you've had the indicators, some of you are trying to trade it standalone. Notice a theme here. Pitchfork, standalone. Quickfire, standalone. Charlie Delta, standalone. Tab 29, standalone. This, you have to learn what tab 29 is. Once you do, we really don't want to spend a lot of time standalone. What you want to do is use tab 29 to bring precision to your standalone pitchforks. You want to use tab 29 to bring precision to your scans. You want to use tab 29 to bring precision to your Charlie Delta forks. You want to bring precision to existing SNR and using tab 29 as a confirmation of that. So when we're finished with our understanding of tab 29, it's not a system. It's the science of price movement that will bring confirmation. Look, I was, talking to one of the crypto educators the other day. We're a little bit more organized than the Forex traders are, and I don't know why that is, but it just is. We have some of our own groups, some of our own Telegram channels, etc. And I was talking to one, and he showed me his system. Now, he's trading crypto with it, but it doesn't, as I said last night, there's no magic. You could trade anything with it. He's showing it in crypto, but it's just a trading strategy. And it's pretty good. I like, but there's some things about him that are really interesting. First of all, he has his rules. Second of all, he's disciplined. No FOMA. Oh my gosh, we looked at a number of trades that he didn't take because it didn't meet his rules. So no FOMA. Very high percentage. As I looked at it, and then I looked at it several hours afterwards in several other places. And you know what? Then I put tab 29 on his system. Whoo! Smoking! Smoking! We're going to go a couple months here, and then I'm cutting the apron strings. And you guys know what should define a new paradigm system. Means I can trade it in one way or another. Even if I could trade it on a time period, the time period's low enough that I could have pretty precise entries. So this guy's system was a 15-minute system, and I put my tab 29 on it and still was able to beat his stop losses trading right from my 15-minute chart because we have some precision. There's slush in it, so I'm able to bring it down to the 1-minute chart. And not only did the 15-minute beat his stop losses, I smoked them when I came down to the 1 minute. So tab 29 layered on top of his system was stunning. And you'll be able to do this. You'll be able to go out and find multiple strategies. Maybe it's simple. Maybe it's just some diversity. But you throw tab 29 on top of it, on their rules, these have to be reversal systems. Those are the hottest things you're going to do in a small time frame. So get out of your mind that tab 29 is some standalone thing. We're going to learn it standalone so you can see the reality of it. But don't get all, I'm having a hard time picking out which one's which and which is the good ones and blah, 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 blah. If a system, now look, pitchforks are a system. They're a model. If the system is giving you an entry, tab 29 just brings higher probability to it. Whether it's pitchforks, whether it's quickfire, whether it's Charlie Delta, which marries quickfire to Charlie Delta, then we're going to throw tab 29 on it. INS is, we call it the intraday navigation system. It's specific SNR for intraday trading. You should be authorized for those indicators. It's called INS, and there's a suite of them in there when you get into it. We haven't taught it yet. Notice here it says no training on it yet. We're going to get to it here in the next few weeks. I'll show you how you can use INS. So don't view tab 29 as some standalone thing. You can trade 10-minute tab 29 alerts. And if you trade it as pieces of 10, you're in there essentially a little bit more than scalping. I like to call it burst trading, but short pips, but very high probability on the pieces of 10. You're rare to lose. You might not make 10 pips every time. You might make 5, 7, 8, 11. But 10-minute tab 29 with pieces of 10, you can trade standalone. Kind of when everything else isn't giving you anything. And you still want to trade some. Yeah, it's glorified scalping, but most scalping is just going for 1 to 3 above spread. And we're not, tab 29, 10 minutes, because it is a 10-minute burst, does a little bit better than that. It's just not any 1-minute wave. It's the one that is a 10-minute wave. See, same thing. Scalpers trade 1-minute charts. We're trading from a 1-minute chart, but we're not trading just any 1-minute wave. We're trading the 1-minute wave that is also a 10-minute wave. Just like the 15-minute wave that converges in the 30 is going to be the strongest 15-minute wave, the 1-minute wave that converges with the 10 is really a 10-minute wave. We're just trading pieces of it because we're exiting and re-entering. All right, enough about that. Let's go back to the question. If I hope to see some examples, tab 29 on the charts covering different scenarios. Okay, let's go. Well, we already saw this one example. There's a scan. Price is moving down. 30-minute wave is moving down. I know there's going to be a 30-minute convergence. 10-minute wave is pulling it down. That's going to be a strong move because it's not just a 10-minute, it's a 30-minute convergence. And we have great precision with it. So there's tab 29 with a scan. Already looked at it. You've seen this one. This was one of my original teasers for harmonic wave convergence on TradingView. We have a pitchfork. It was a traditional pitchfork. We have a perfect bounce off the median. Sync and visibility was on. Here's my median right here. Here's my median right here. 30-minute chart, 1-minute chart. I have my price go up and tag the median. My 1-minute wave pulls back in tab 29 from this 10:30 convergence. The bars turn red. I enter the trade on 3 pips. Yes, it's a traditional fork. There was a bounce down here that was kind of okay, but what brings the ability to not worry about the breaches here or the shortage here is because right here, you can't get a better touch. And oh, nice, pound yen move. So there it is with a pitchfork. Got some other examples here. Now, this is from Glenn, and you'll notice, the trade over here. Notice there's a tiny little scan in here. But he drew a Charlie Delta, ran it out, and what I want you to pay attention to is in his entry over here, he had a 1530 convergence. Now we would drop down to the 1 minute chart to execute, but I want you to see it here on the 15-minute chart. And then down here, that D bounced off the upper parallel of the same fork. Look at your entry. That's the 1530 convergence. Another scan. Now, it's one of my trades. Just like super recent. Some of you may recognize. This is on a 60-minute chart. One-hour wave converging with the 4-hour wave. '60-minute convergence as it's bouncing off a warning line. Drop down to a lower level chart, catch the trade. This is really good on several fronts. We've got a double INS hit as an energy point. This was also fairly recent. Existing pitchfork was traditional. Perfect bounce off the pitchfork. 1-hour convergence. Also, you will notice shadow band, Fibbo pivot line. Move to the 1 minute chart, and there's my pitchfork line, unadjusted, sync and visibility turned on. Here's my 1 minute entry. I have a 30-minute wave at the top. I've got my 10-minute wave converging. My 1 minute wave goes up and spikes it. I've got my red bars. I enter the trade. These are 10 pip channels. These are 10 pip channels. And that closed bar, as you can see, is probably about 3 to 4 pips into the move. I don't need tons of pips, guys. These are 10 pip channels. Price comes down and hooks back. I got the green bars. I'm out of my trade. So how many pips did I make? 10? About 7? Pay the dealer 1 or 2, a couple for the reverse. Bank 10 pips easy. You're done for the day. When you do your setups, when you draw your pitchforks, when you take that scan and put the Charlie Delta on the chart and you let it ride, these trades come to you. You don't have to get in here and go, oh, which is the 3 and where's the 4 and what's the percent? Come on. These are as easy as they come, guys. And this one I just absolutely love. Okay. I love this. Now, there's a lot going on here, but I want to show you how you use this stuff because this is what I do. There was a trend line. It had a perfect hit over here. Yes, we come down and we breach it. But with this hit, I draw a trend line. Don't show it here. I draw a trend line against that. Next trend line comes along, you know, I can no longer use that trend line because price moved up. So I draw a new trend line from that previous hit down. Whoops, it was down here on this route. Excuse me. So I have my hit here. I keep drawing trend lines. Every time there's a bump, I draw a trend line. I would have a trend line over here, as I said, just to see if another bump comes along on that trend line. And it didn't. Price went up. I keep this trend line on the chart. Oh, look, another hit to it. That's pretty interesting. So now I've got two hits on that trend line. Price comes down, hits my trend line. I have convergence, but a lower low in, so I'm answering a couple questions all at once here. I have a lower low here and a higher low here. What's that called? Who wants to tell me? Yeah, the D word. Thank you, Wayne. It's divergence. And that bump on the trend line, my third bump on the same trend line, at the time I have a convergence that happens to be divergent. My pullback is exactly 61.8. That's a trade. 61.8 trend line convergence. These are 10 pip channels. You don't have to figure out how far you go to make a handful of pips. That's 30 pips. Look at the move. That's how you trade with TAB29. Well, you can't draw the second bump on a trend. You can't, because you don't know it's a solid bump. You can't take the second hit on a trend line. The second hit is, the second pullback is where you draw the trend line from. Now, somebody that's been trading a while for, and again, I'm not trying to discourage anybody. I'm just showing how your knowledge grows over time. Here's Glenn. Again, picked one of Glenn's charts. Notice something on the chart here. What is that? Who wants to tell me what that is? That's a TAB29 alert. And guess what? I won't do this often, but I'll do it here. This is probably a wave 2. In this move here is probably a 2-3 with the 1, 2, 3, 4, 5 inside of it. So any number of stuff, from scans to pitchforks to trend lines to Fibonacci confirmations, bring a 4-hour Fibonacci down to your 15-minute charts. Bring a 6-hour Fibonacci down to your 15-minute charts. And if price is bouncing really hard off one of those Fibonacci numbers and your tab 29 gives you an entry, you have a trade. Notice none of these was set. Well, I've already answered that, Amundo. I said you can trade 10-minute alerts. You can trade 10-minute waves, 10-minute convergences from tab 29 alerts. Yes, you can do that as pieces of 10. Just explained that a minute ago. But I only do that when there's nothing else available. There's plenty of stuff available. Just go to different currency pairs. You find something on every chart, and during the day it'll give you. I'd also like to understand what value, if any, is there to looking at tab 29 or higher level charts like 240 or 480. Steve, I hear you mention those sometimes, so just wondering if we should practice anything there or just leave it alone. It's a point of understanding price movement. You know, your auto diagnostic on the charts. Go back and look at some of these. You know, your auto diagnostic on the charts doesn't let you see the 4-hour wave in here. There's no 4-hour wave plot in here. The biggest it goes is 30. 30, 10. Glenn's got his power 5 on in here. So 30, 10, and 1. It'd be nice to know if this was not just a 30-minute convergence, if it was also a 4-hour convergence. Why? Because the strongest 30-minute convergence is what? Also a 4-hour convergence. So yes, it just pays to be aware of where the waves are at the upper levels. I've been finding it difficult to find the channels and then understand exactly where a pair is at in terms of Elliott wave. I found there are harmonic convergence that I shouldn't get in on. I don't like that part. But all this we already talked about. We don't need to know where it is in terms of Elliott wave. Who cares? You're not always going to be able to draw channels. Who cares? You can channel trade. You don't need the channel trade. Look for other support and resistance. Where's my scans? Where's my pitchforks? Where's my upper level Fibonacci's? Those are the bounces that tab 29 is going to give you. Such easy. I mean, it's picking the low fruit. It can't get easier. So I've kind of already explained this question away. The thing is, though, you know, I found there are harmonic wave inversions that I shouldn't get in on. So this is what I call hunting for trades. You're looking at convergences. There's 10 of them on the chart. You look back and 4 of them didn't go very far. So you say, those are the ones I shouldn't get in on. How do I know which ones to get in on? The ones that are occurring at the times you're having bounces off upper level Fibonacci's, off pitchforks, off, you know, shadow bands, off your Fibbo pivot lines, off your Camarillo lines, off your trend lines. Those are the ones you take. And there's so many of them. See that, and this is okay. I'm not belittling this question because you've had no training. You had the training that you took on your own, and then you were given the indicators. But you haven't had, you haven't had any sessions like this to say, do this, don't do that, etc. So we're good. All right. Price does this. Let me give you a little example. Price does this. Just to kind of make a point. Let's say this price doing this is on a 5-minute chart. And I look at my 10-minute wave. Oh, gee, I had a convergence. And pull back. And I look at my 1-minute wave. And somewhere right about here, I get an alert on the IML web analyzer. And the alert is for a 5-minute buy. We don't know what the algorithm is in that harmonic analyzer, but I can see this thing here on the pullback. His alert probably just fired off a little early based on his algorithms, and I could surely see right here after this pullback a pieces of 10 higher low entry. Jeez. So add to the number of things you can trade with TAB29 being the IML web analyzer. Not the ninja this or not the 4 rule that. Harmonic wave convergence. This is probably a wave 2. And somewhere near the bottom, I got an analyzer alert for a 5-minute buy. I go look at my chart. Yeah, we just finished a wave 2. We're about to finish the wave 2. Oh, the bars are turning green. Enter the trade. Yeah, this is supposed to be 9. I don't know how that got switched. This is not what they've been saying. My bad. I'm still sick. Where did that take place? Wow, from the very beginning, huh? I got it right there. All right, whatever. Oh, me. I'll move them over and get it right, but this is being recorded. So, question answered. Asked and answered. My question is regarding waveology. In the beginning, module 2, you talk about the 1-2 move, then the 2-3 move that is within a 1-2-3-4-5. In regards to the 2-3 move, we can expect an impulsive move up and a good entry point. What time frames are we supposed to have on multi-wave? Multi-wave is auto-diagnostic. Whatever chart time period you're on, it puts the right waves on for you. I do not see a 1-minute setting for multi-wave. Well, it's on every chart. Don't know what to say. Multi-wave and TAB29 auto-diagnose based on the time period you're on. You will not see a 1-minute wave on anything other than a 1-minute chart. It's impossible. That's explained in the TAB29 training. We cannot move smaller waves upstream. We can only move upper level waves downstream. You want to see a 1-minute wave, you have to be on your 1-minute chart. Well, this is just a little bit of waveology. I don't know what to say. The only place we really talk about this is in the 1-2 move. And again, my voice is going fast now. I reached that point. I have a 10-minute convergence. At the time the 1-minute wave goes up, green bars, Dallas is sneezing in the background. He's gotten sick too. And we talked about what pieces of 10 looks like here. You don't have to worry about if this is technically a wave 2. Most of the time it is. So here's my 1, here's my 2. In the yellow wave. It just so happens the 1-minute wave's coming back. Most of the time, this is going to be a higher low, which is a valid entry point, assuming we've got back to, and we very well may have some that stayed green in that stretch, but all or some might have gone red on this hookback. Remember, this is 1-minute chart. These are 1-minute wave turns. So when this hookback occurs, it is the higher low, and the waves now again all turn green. I have my entry. Most likely a wave 2. Don't worry if it is or isn't. You don't have to be so specific. That's all there is to the mechanics. It's the higher low. Now, a lot of traders, just trader choice, a lot of traders will not try and take this trade. This is a pieces of 10 kind of move. It may be a convergence on something else above as well. Maybe a 30-minute convergence. This could be a pitchfork lower boundary hit. This could be maybe a D scan down, a bullish scan that's going to turn around, reverse, and go up. Or it might just be a TAB29 10-minute alert. We got a lot of traders who will not take that convergence. They will wait for the wave 2. That's their choice. Generally, the convergence is strong enough that these pips are worth getting, and you'll get out on the contra trade. When it's a sell, you're exiting the trade, unless there's more than a 40% pullback. And you could pocket some pips. And then if it's going to continue up, you can re-enter here. So there's not that much to it. Don't make it more complicated than it is. Don't worry about channels unless the channel is clear and present. Trading doesn't work like that. Look, channels have nothing to do with TAB29. They're not interrelated. TAB29 is an overlay. If there is a channel and you can put strong trend lines on it with to the pip touches, then TAB29 is going to be your best friend. But, this stuff about, I can't find the channels and blah, 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 blah. Well, that has nothing to do with TAB29 trading. That's got to do with the price movement on the chart you're looking at the time. Okay, so don't make this more complicated than it is. It's easy. Go review the pieces of 10 trading module, the last few modules, one of the bonus modules, whatever. Pretty easy stuff. By looking at the 1-minute chart, you are trying to sync up convergences which represent turns on upper level charts. This is kind of a redundant question. It's applied to higher time frames. We don't need candle close. We look for it. The trend bars are old paradigm indicators, tweaked some, but they can be used on 1-minute charts, as I said last night, because they have very little slippage. Generally, the slippage on an old paradigm indicator on a 1-minute chart because the 1-minute waves are very small. Generally, an old paradigm indicator on a 1-minute chart will flip within, I was going to say 2, but 1 to 3 pips. You can't use trend bars on upper levels because you have that 15 to 20 pip to 25 pip slush. So by the time the trend bars all flip, price has already moved, 15, 20, 25 pips from the turnaround, from the convergence point. So we don't use trend bars there. It's the typical reality of old paradigm indicators. They cannot scale up without increasing the slush. We're going to use the 1 minute to be the convergence point. So when the 1 minute converges into the 10 or into the 30, that represents the turnaround for those waves, be it 10 minute or 30 minute. That should have been blue, my bad. Or 30 minute. So yes, we like to see that flip in 1 to 3 pips. So as price is moving up here, we want to see those bars start to turn green. Candle close, because as Zoe will tell you, it could go up and start to pull back down inside a 1 minute candle, and all of a sudden it's red again in a couple of the bars. You wait for the candle to close, and again, usually 1 to 3 pips. We like to target 2 because that's where it happens about 60-70% of the time. But from 1 to 3 pips, we should see these things all turn green. And if the candle then turns, closes, and the next candle opens blue, we enter the trade. If the next candle opens red, we're not entering until it goes above this price. And I don't mean having a sideways consolidation for 8 candles and then going up. I mean within the next candle or so. So it's pretty easy. We have the convergence, the 1 minute wave hooks up, and price starts moving up. We're looking for the bars to flip. If they all flip and it closes within that 1 to 3 pip range, we have our entry. Now, this is assuming you understand a little bit of risk reward. Normally on a 10-minute move, so I have the 30-minute wave in here. So let me backtrack out the 30-minute wave for a second. Let's just talk about a 10-minute convergence. Generally, a 10-minute convergence, wave sizes vary somewhere between about 7 and 15 pips. Back in Pip Club, we call them small, medium, and large waves. And the small is about a 7 to 10 pip move. The medium is like 11 to, or 7 to 9. The medium is like 10 to 12. And a big move would be like 13 to 15. Can it move less? Yes. Can it move much more? Absolutely. We're talking about a 10-minute wave. So, if I look at the median of that, about a 10 pip move on average, I don't want to get into a trade much beyond 3 pips. There's just not enough room for me to pay the dealer or see the reversal and get out and make anything. But don't take me literally then on, Steve says you can only get in 1 to 3, the candle has to close before 3 pips. If this is also a 30-minute wave and I'm a pitchfork bottom, and the median is 70 pips away, if the bars flip but the candle hasn't closed until it gets out to 5, I would still consider that trade, because look at your risk reward. It's only when you're trading the 10-minute wave blind that you really need to see this ideal too. And that's because the reward is on a typical 10-minute wave with nothing else in sight, just a blind 10-minute move, is about 10 pips is the normal wave. So I don't want to have a 5 pip entry on a 10 pip move. Pay the dealer 2 pips to turn around and get out, and not worth my time. Moving fast, almost done. I'm going to just go ahead and finish it off. I struggle identifying which harmonic wave convergence point is the true reversal point from the D of a scan. Once I get an alert and transfer the scan over to my trading view charts, I'm monitoring the 1-minute chart for the full harmonic wave convergence. You can pretty much say on a 15-minute chart, unless the scale's really, strange, you're going to see the convergence about to occur on your 15-minute chart. But you are going to execute from the 1 minute. What tends to happen is I see the peak hook back with bars flipping, indicating that I think is the start of reversal, but the peak doesn't go to the other extreme before hooking back. I know this means there's still pressure in that direction, but then the pricing, blah, 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 that's in the scanning job, blah, 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 blah. It was a 15-minute scan. This took place, just a couple hours before our session. It was a little weird because everything was right on the scan except the D was kind of like, the middle of that red candle. A weird place for the D. I don't know if that was a bug or, what's going on. So let's look at our 1-minute chart. Let's say we saw that as the entry. Wouldn't be too hard to do, actually. The D was right about in there. There's our entry line. So we went past it, a couple pips. And we have a 1-10-30 convergence, really strong. Get in the trade. These are 5-pip channels, the best I can recall. Yeah. So price comes down. This is exactly what it's describing. It didn't go to the opposite extreme, hooks back and starts coming back up. Green, exit the trade. Now, how much did I make? That's a 5-pip channel. I got 2 pips to get in. It hits a low and comes back. I got to pay the deal. Maybe I got out at 0. Maybe I got out at +1. That's not a bad entry or a bad result for an attempt at a 30-minute trade. The difference is with TAB29, you exited on this hookback when there was upward momentum being showed by the green candles, and you got to get out there. What if you had your stop loss up here somewhere? So that guy would have gone out, depending on what they're using and how far this really went. Maybe they got out at -3. Maybe they had a 10-pip stop loss and they didn't get taken out. But it eroded everything he earned. It would have, it didn't stop him out, but he went very negative. Now he's got to earn all that back to hopefully, get positive in the trade. But anyway, TAB29, I'm out of that trade. Comes up to a higher point. 1-minute wave leaves the 10 and the 30, and I got red bars. I enter trade again. Comes down a little lower, starts the hook back on me. Here's my green bars. There wasn't a whole lot of movement up in this pullback. So I got out pretty early. So you know what? Maybe I made 3 pips on that one. Still wasn't the move. We go higher. Oh, look at that. A Fibbo pivot line. Stops at once, stops at twice, stops at a third time. It does breach, it comes back and starts to come back down. 1-minute wave is leaving the 10-30 convergence. I have my red bars. I enter the trade. Ba-boom. Comes down to the bottom. I can exit on a hook back where it's green. That's not going to be it. There's no green. that's going to be it. I got green. And once again, it doesn't pull back that far. And I probably make there about 10 pips. Pieces of 10. So, 0, 3, 10, 13 pips. Anybody complaining? Anybody complaining? See, it lets you take these trades that, without the assistance of tab 29, you're just kind of hoping and wishing, and that's why people put stop losses up here and enter the trade and hope for the best. We're almost done. I would love to have better understanding of using trend lines in the indicators to help establish entry. Also, explanation on setting tab 29 alerts. The tab 29 alerts are covered in the tab 29 installation video. I walk through exactly what you do. So re-look at your tab 29 installation video. It shows you how to set tab 29 alerts. Trend lines in the indicators. Oh boy. Let me go back to the examples. Okay, hold on. I just don't have enough distance in here with any of these examples. Oh, wait, let's see what we got here. You could draw them on any indicator. Well, typically you want to draw it on the time frame that you're at, for trades. So a good example here might be in my multi-wave. I could draw one right here. And so what happens then is, I could take any of these trades on the hook back. So this one and this one, these are the ones that set it up. Point 1, point 2. Point 3 is a trade, point 4 is a trade. And notice point 4 gives you that move. Now it is a 30-15 convergence, which is why it moved out on you. But you trade it the same way anything else. When the wave comes down and flips back, you get out. When the wave comes down, flips back, you get out. Comes down, flips back, you get out. And then you have a trade. And it goes. I don't know why I didn't come and look for some other examples before I came in here, but they're no different than a trend line up above. They're no different. It's just a trend line happens to be in the indicator field. Already done. Steve, can you discuss tab 29 in relation to pitchfork trades, more specifically using tab for bounces off the parallels mean? We already did that. Showed plenty of examples of that. Okay. Some of these questions were answered as we went through the night, I think. So that's it. I covered all the questions that were asked in the time frame that I asked. Kind of a quick get-to session for those, because we've had a 3.5 week break. So we should get to it now. Now you can start taking some trades. Okay. So here's the deal. Your TAB29 trades for now need to go into the Precision Traders group. That doesn't mean to abandon the Scans, Forks, and Fibos group. I still need you to help out people in that group who are starting out and no less than you. And if you take a straight pitchfork trade or a straight Charlie Delta trade or a straight quickfire trade, it would go in the Scans, Forks, and Fibos group. Any questions tonight? Made it under 2 hours. I was trying to shoot for an hour and a half, which is why I thought I might go to Tuesday, but I think we covered it all tonight. If you're new to our group, I would remind you to view, it just depends on how long you've been around me from the Scans, Forks, and Fibo group. If you've already mastered pitchforks, if you've already mastered quickfire, if you've already mastered Charlie Delta, yes, jump into TAB29. There is a roadmap, and that roadmap holds for this group. Don't jump into TAB29 if you haven't mastered pitchforks and quickfire and Charlie Delta. Go through those first. And if you want to know why the new paradigm, go to the pin post for the Scans, Forks, and Fibo group and watch those videos. All about risk, all about why you might want to consider using pitchforks in your trading. You need to get through that. Don't worry about where the group as a consensus is. We have a path. You know how to follow the path. We've got a trail. Everything we've done is recorded. So you could be brand new to the group today or 3 months from now, and you'll still be able to take the same process everybody has gone through. That being the case, I will close out tonight, as I always close out my live sessions at night. Remember, life can be short. So for those people you love and care, let them know you love and care them. Because if you don't, the grizzly bear is going to come get you. Y'all have a great weekend.